Time for markets now, and according to the USDA's latest crop progress report, corn is more than 3/4 harvested, while soybean harvest is nearly complete. All of this on the heels of corn and soybean prices that continue to see lots of optimism for those producers. Darren Fessler of Lakefront Futures and Options joined me this week to talk about all that and more. But I began our interview by getting an idea of how our recent bout of snow and cold weather has impacted the market.
Yeah, far from a corn and bean standpoint, I don't know if it's going to have a major implication on harvest progress at all. Harvest progress in general across the state of Nebraska has been going pretty good, more or less because we haven't had a lot of rain. Knock on wood, we kind of need some of that. But I take a look at, how much this corn has really dried down in certain locations, and then other locations, say you're out kind of central Nebraska, whether it be the clouds, maybe some of the smoke from the fires, but some of that corn's kind of stopped drying down a little bit. So that's a little bit of a concern for some guys out there. But in general, I don't think the recent snows are going to have that much of an impact here.
Darren, we've talked on the show the last couple weeks about the rally with corn and soybeans. Are producers still seeing lots of optimism with this?
Oh, for sure. And like they probably should at this point. You look at where we've come basically from those August 10th lows to where we are now. And, I don't think anybody in their wildest imagination could have seen this type of resurgence. Because I will say with clients across the country, the yields, they're okay. They're not great, but they're not a disaster. But there's a lot of variability in this corn crop. And you take a look at how the spreads have reacted on corn and in the beans, even the basis levels on corn, it's telling producers exactly what they need to know right now and what to do. The demand is strong, the basis is strong, and I think there's multiple things. The demand is there, and the crop may not be there. I think it's there to a certain point. We're probably not down to a 1.2 or 1.3 billion carryout on the corn, but we are significantly under a 2 billion, I think, at the end of the day. Now, whether the USDA recognizes that in the November WASDE, I think only time will tell. But the way the spreads of bases are trading, I think we're probably somewhere 1.6, 1.7 billion carryout instead of a 2.2 on corn. And if you look at the bean side of things, the pace that we are on, just looking at the sales, if we stay on the same pace, we're going to outpace the USDA export projections by over 630 million bushels. We'll be out of beans by then, and that's not sustainable.
So what are some things producers can do to take advantage of these higher prices?
Well, like I said with the spreads, the market's telling you they want the bushels now, and I really encourage producers to take advantage of the bushels, because if you're planning on rolling from, say, on the beans, November to Jan, you're actually rolling into an inverse. You don't want to do that. You're probably going to pay a roll fee as well. Take it, look for a pullback. But if you look for a pullback here, re-own the board. I still think there's some situations that could play themselves out in the producer's favor in Argentina and Brazil. The dryness, especially in southern Brazil, is not going away, I don't think, tomorrow. So I think there's still going to be opportunities for the upside. If you look on a technical perspective on November beans here, as long as we get a close above 1082.5 on the continuous charts, it could, not saying it will, but it could go to $11.30 to $12 if you run into some weather issues in South America, because you pushed off the bean crop to a certain point where you're going to really hurt the safrinha corn crop. Corn, again, could continue to on its bullish trend as well. So anything above 420, you could be looking at 440, 450. But then you start wondering, okay, when do the back months, like these 21, November 21, when do they have to start participating? Because if we are significantly low on the bean side of things, you look at Nov 21, boy, that would be significantly undervalued in my estimation.
And then what about some things farmers can do to protect themselves? Seems like there's always instability out there that turns things in the other direction. So you need to keep your eye on the markets, but also any outside influences, right?
You absolutely do. I think we're at levels on both the corn and the bean market. You step in, you reward it. If you think it's going higher, just simply buy some protection, buy some insurance underneath this market to give yourself somewhat of a floor. Don't be overly aggressive with futures right now, especially on the bean side of things. That's what I continue to advise clients, because this thing could really ramp higher here because it really has that fundamental story, has the technical story too. The corn side of things, Grant, if you look at the payments that we'll have from the PLC and some of the other government payments, we're at levels where just rewarded with some cash sales. I think that if you're up that 50 to 75% sold on the corn at this point, I think those are good levels. Keep in mind, if the spreads continue to act as they are, there's really not a good reason to hold corn past March of next year. But if it does, can dryness conditions linger on, hey, re-own it on paper. That's still an option for producers.
And Darren, before we let you go, another big thing that we're watching, less than a week away now from the presidential election. Investors, of course, paying attention to the stock market during an event like this. But does history tell us we can expect volatility or any surprises in the ag markets?
Well, there's been studies out there revolving around the equity markets leading up 90 days, 60, 30 days leading up to the election, and how does the stock market performance and how does that pan out for the incumbent candidate? And it bodes well for the incumbent candidate. Now, the impact on the agricultural side of things, I think you got to look at maybe the other side of the aisle and saying, okay, what ramifications and what relationships has say Biden had with China, and how does that move going forward? Because if I look at the list here, China's number one on corn sales right now, number one on beans, number one on pork. China is buying a lot here. So how does a Trump reelection, how does that impact the relationship with China moving forward, or vice versa with Biden? I think you got to look at the trend as your friend, follow the technicals, and watch what China does, not what China says. And I think that's going to be the leading indicator of where a lot of these commodities go, regardless of who's elected.